Hello, welcome back to CMG Oral Space Forex lessons. So we are continuing from the previous class, right? Our previous lesson, our previous episode. So I recommend that if this is your first time of watching this series, I recommend you have to start from the beginning, episode 1, and then so that you can catch up, so that you will actually understand. If you don't do that, I think you won't understand whatever is going on, right? So that is it. And this is mastering what? Candlestick Patterns, episode 3. I'm Emmanuel, or you can also call me Kujo, right? So without further ado, let's jump into today's lesson. And today's lesson, basically, we are going to talk about what is a candlestick, right? A candlestick. So before I say anything else, or I even delve in further, we have two types of candlesticks, basically. We have the bullish candlestick, and then we have the bearish candlestick, right? So when you see a bullish candlestick or a bullish market, or bullish chart or price action, it's actually talking about what the buyers having what a higher pressure, right? A bigger pressure in that time frame, right? The activities are very greater, much stronger than that of what the sellers, right? And then when you say a market is what bearish or price is bearish, meaning the prices are moving down with the help of what the sellers. The sellers are in charge, they are in control of the market, right? They are in control of the market. So basically, two types of what? Candlesticks. Now, candlesticks can be represented with any color at all, right? In this book, the book is using white candlestick to represent what? The buyers. And then the black body as the sellers, right? But as we proceed, I will be using, in fact, we will be using the green to represent what? The bullish candle, right? The bullish candlesticks, and then the red as the bearish candlesticks, right? Now, for every candlestick, we have parts of it, right? Every candlestick has some parts, right? It has some parts. In the same way, a bullish will have a candlestick of some parts, unique parts, and then the bearish one will also have some parts be unique, right? The uniqueness is only lies in the opening and then the closing of that candlestick, right? So now, looking at the bullish candlestick, right? The first one, like I said, the white is what? The bullish one, the bullish candlestick, spelled as BULLAISH, right? The bullish candle. The bullish candle. Now, and then every candlestick has the actual body or the real body that is called. The actual body or the real body, right? The actual body or the real body. Now, this real body starts from the opening of that candlestick. The opening of that candlestick, that's the opening price of that candlestick. And then it ends at what? The closing of that candlestick, right? So now we have looked at what? The body or the actual body of the candlestick. You have the opening and then the closing. Now for a bullish candlestick, it opens at the bottom, right? Opens at the bottom and then closes at the top of it. It opens at the bottom and closes at the top. That is it. And then we have something called what? The upper shadow and lower shadow. The upper shadow and the lower shadow of, or another term or another name for it is what? Wicks. Wick is spelled as WICK, right? The wicks. The wicks looks like what? The tails. The tail of what? The candlestick. The tails of it. The tail of that candlestick, right? So we have the opening price and then the closing price, and then we have the upper shadow and then the lower shadow, the upper wick or the lower wick. And then the last part that we're going to look at is what? The high of that candlestick and then the low of that candlestick. The high of that candlestick represents what? The topmost part of the upper shadow of the upper wick, right? That's the highest price that the candlestick could move to is what? The high of that candlestick. And then in the same way, we have the low. That's the lowest part that the price could move to or moved to is what? The lower of that candlestick, right? So we have some parts. We have the upper shadow, the lower shadow, the real body, the opening, and then the close, the high, and then the low. And then for a bullish, the price opens at the bottom and then closes at the top. So in the same way, when you look at the bearish candlestick, it has the same parts as the bullish candlestick, except the opening and the close, the position of the what? The opening and then what? The close. So here you can realize that the opening of that candlestick is actually at the top, right? It's actually at the top, and then the closing is at the bottom. That's the only difference. Apart from that, all the parts are the same, right? So all the parts are the same. That is it. So let's read more about it, right? The reading, I'm not going to talk much because I've already explained that. So if the close is above the open, right? If the close, like in the bullish sense, if the close is above the the open, we can say that the candlestick is bullish, which means that the market is rising in this period of time, or in this time frame, right? Then bullish candlesticks are always displayed as white candlestick. Per this book, it's using what? White candlestick. So as we proceed, I will be using green and red, right? Now, most of the trading platform use white color to refer to bullish candlesticks. But the color doesn't matter. You can use whatever color you want, right? So the color is for your preference. You can actually use any color to represent either the bearish or the bullish candlestick. But for easy identification and then visualization, we are going to stick to the green and then the red, the white, or the black, right? For convenience, so that you will not waste time and then trying to understand whatever is happening, right? So the most important thing is the open price and the closing price, right? The most important thing that we should have to be looking at is what? The close and the opening of that price, right? Now, because we don't have time to be checking the opening and the closing of the prices on your the trading view or your MetaTrader 4 or 5, it is better or convenient to use the colors like the red and green to represent the types of candlesticks, right? So if the close is below the open, if the closing price, right? If the closing price is below, let's see. Let's assume this is our candlestick, right? Let's assume this is our candlestick. And it's saying that if the close is below the open, meaning the C representing close, and then the O representing the open. And it's saying that if the close is below the open, if the close, right? So okay, then that means it has to be the other way around. If the close is below the open, we can say that the candlestick is is bearish, which indicates that the market is falling in this session, right? Meaning the sellers are in charge. They are pushing the market down, the prices down. Bearish candlesticks are always displayed as black candlesticks, but this is not a rule. Not a rule in the sense that you can use whatever color you want, right? Now, you can find different colors. You can find different colors used to differentiate between bullish and bearish candlesticks. What it means is that you can use different colors to represent the bullish or the candlesticks, whatever. Now, the filled parts of the candlestick is called the real body. So the filled parts is actually something of this sort, right? So, sorry. So when we say the filled parts, the filled part is what? Is this actually? That's the real body. The filled part of the candlestick is called the real body or the actual body. Now, the thin lines spoken above and below the body are called shadows, right? The shadows. I call them the toes above and then what? The toes below. The upper shadow, the lower shadow, or the upper wicks, or the lower wicks, whatever name you want to call them. The top of the upper shadow is the high. We have looked at this already. The top of it is called the high, right? And then the what? The bottom of the lower shadow is called the low, right? Now, we move on to what? Candlestick body size. Now, candlestick body sizes actually talks about what? The height, basically, from the layman perspective, is the height, right? But not the width, as in how wide the candlestick is. But it's all, we are actually going to talk about what? The height, right? How the selling pressures or the buying pressures what? Move with great momentum, right? Because when you say the size, like from the layman perspective, you may think it's how wide the candlestick is. Because on your screen, on your PC, or actually, you can actually zoom in and zoom out, right? And this zooming and zooming out does not affect the size of what? The candlesticks, technically, right? So when you talk about the size, it's actually talking about the selling pressures or the what? The buying pressures, the momentum with which the prices moved, right? So now, long bodies refer to strong buying or selling pressure. Long bodies, as I refer to them as the height, is what? Is a strong buying or selling pressure. If there is a candlestick in which the close is above the open with a long body, this indicates that buyers are stronger and they are taking control of the market during this period of time, right? So it's as simple as that. I can take it again. Long bodies refers to strong buying or selling pressure. If there is what? A candlestick in which the close is above the open with a long body, this indicates that buyers are stronger and they are taking control of the market during this period of time. So when you look at this candlestick, actually, it's a small body. So there was what? Even though it is a bullish candle, right? The buying pressure was not that high, even though it was compared to the sellers, it was higher than the sellers, but it was not much. It was not much, right? And then, but when you look at the same candlestick type, like the bullish one, this is what? A strong, massive force, pressure, or flexed by what? The buyers. So the same way too is applicable to the bearish candlesticks, right? So that's what we are talking about. Now, conversely, if there's a bearish candlestick in which the open is above the close with a long body, this means that the selling pressure controls the market during this chosen time frame. Short and small bodies indicates little buying or selling activity, right? This only represents a short or little buying pressure. The same thing shows what? This one also shows short or little selling pressure, right? So that is it. Now, candlestick shadows, like the tail, the upper and lower shadows give us important information about the trading session, right? The upper shadow signify the high session, right? The upper shadow signify the session high. The session high, that means how long the price moved or the distance through the price moved either above or below, right? But it didn't actually stay there, right? For instance, we have this candlestick here, right? And then, sorry, excuse me. Then we have these wicks, right? So what it means is that price, for instance, let's say this is a bullish candlestick, right? Meaning the price opens here and then closed here. So when the price moved, opens here, it may have what? Moved down, but when it moved down, it didn't stay here, right? The sellers tried to push the market, the prices down, right? It moved to this point, but they couldn't sustain that pressure, the selling pressure, and then the buyers came into play, right? And then they pushed the market up through here to this point. But now when they got to this point again, the sellers came into what? Into play, and then they also pushed the market, tried to push the market back. But when they got here, I think their power was exhausted, got finished, and then the price closed at that point. So that is the meaning. So price, the wicks shows where the highest point or the lowest point that the prices go to, and then they retrace back to whatever they had to what, close or what. Or yes, so that is it. sorry, once again. Now, candlesticks with long shadows show that trading action occurred well past the opening and close, right? So that is it. So candlesticks with long shadow, it means that the activity was very high, right? The sellers were what? Fighting. A tug of war happening. Prices move up, it moves down, moves up, move down, moved up, move down. So in that time, until that particular time frame was due. So the moment 1 hour is due, or whatever time frame that you're trading on is due, the price is what will close. So right, so that is it. Now we have the long shadows like we display, long upper shadow, right? This is an upper shadow, long one, and then we have a short one. Here is what? Short upper shadow. But here is a long lower shadow. So this is what we call it, the wicks or the shadows. Now, Japanese candlesticks with short shadows indicate that most of the trading action was confined near the open and close. Let me take it again. Now, Japanese candlesticks with short shadows indicate that most of the trading action was confined near the open and close. So it means that, for instance, when a candlestick forms here, right, and then the wicks are very short, it means that prices did not move higher, too high, or too low. They just closed around the opening and then the closing. Candlestick can be as short as this, right? And then the wicks can be like this, right? You can even have some candlestick forming like this. Candlestick, you have a look at them. Having candlestick forming like this, meaning the opening and closing is very close, right? So that is it. Now, if a candlestick has a longer upper shadow, and a short lower shadow, this means that buyers flex their muscles and bid price higher, right? If a candlestick has a longer upper shadow, so for instance, I think we can use this is the best example, right? So if a candlestick has a longer upper shadow and a short lower shadow, this means that buyers flex their muscles and bid what? The prices higher, right? Longer upper shadow and then short lower shadow. This means that buyers flex their muscles and bid prices higher. That is it. Now, but for one reason or another, sellers came in and drove the price back down to the end of the section. But for one reason or another, sellers came in and drove price back down to end the section back near its open price. So that is it. So a minute. Right. So what it means is that when this candlestick formed, all right, when the price when it opens here, it opens here, price opening here. This is what a bearish candle. So it means that the price opened here. O is here. I hope you recall this. For a bearish candle, the opening is what is at the top and the closing is at the bottom. So price opened here. Now, when price opened here, right, the buyers came into being, flexing their muscles as if they are going to take control of the market. So they try moving the market up, right? Moving the market up. Buyers push the prices up. They move the market up to some level, which is the highest point here. Now, the sellers were not playing at all. So they also came into being and then pushed the market down, back down to this point, back to this point. Now, when they pushed back to this point also, the buyers also came back with some kind of force, trying to push the market up again. But when they got here, their power was exhausted. So what happened is that the price closed here, the market closed here. So that is the meaning of this, right? I hope you understand. Just you can pause the video or repeat it and then have a fair understanding of that, so that at least the information will simmer into your head, right, into your brains. So have this price will open here, and then buyers try to push the market up to that point. They actually did what? They pushed the market up. But when they pushed it up to this point, the highest point, sellers came into being, and then they pushed the market back again to this level. Now, pushing it back to this level, the buyers also came back. They came back. So this market is a fight. It's a constant fight between buyers and sellers. Have that idea at the back of your mind that it's a tug of war. Sellers fighting, buyers also fighting. Who will win at the end of what? The candle, the candlestick formation. That is what happens. So they also move it, sellers also move the market back down. Now, when they got here, the buyers also came into being again, and then they tried to move the market back again. But when they got to this point, their power was off. It couldn't match up that of what? The buyers again. So it closes here. So that's all that the book is talking about here. So I think most of the explanation, I will just do it by talking initially before I try to read. The reading is a lot. So but I think you should rather listen to what I say attentively, right? Listen to whatever I say attentively before coming to the reading, because the reading can be a bit confusing or maybe too heavy, right? So just listen to what I'm saying and then you can go back to the reading, right? So now, if a Japanese candlestick has a long lower shadow, right? A long lower shadow and a short upper shadow. Long lower shadow and a short upper shadow. This means that sellers flash their dashboard ups and then force price lower. But for one reason or another, buyers came in and then drove price back up to the session back near its open price. So the same thing will be applicable here. It's just one thing and then the opposite of it. So if you really got the explanation here, then I think you have to understand this point also. So that is it. Now we go to candlestick patterns. Candlestick patterns. I think we should treat this one in the next episode, right? So we will end here. So I also suggest that you follow and then you subscribe, right, to our YouTube channel and then other platforms, right? You can check this in the bio of our page, and then you have the information. We also provide personal as in private online lessons, right? If you check the bio, we have all the information there. Then we can do one-on-one training or practice or lessons. I think that one will be convenient, right? So I think we'll end here. Thank you very much. And then let us meet in the next episode. Yes.